The global energy market is under severe stress. While US officials insist the spike in fuel prices will be temporary, countries across Asia and Europe are already grappling with shortages and rising costs. As the crisis deepens, concerns are mounting over inflation, economic growth, and the long-term impact on global energy supplies. Take a look at this next report for more. The global energy market is facing one of its most severe disruptions in decades. The closure of the Strait of Hormuz has halted nearly 20% of global oil and gas flows, sending Brent crude prices soaring above $100 a barrel. The supply shock is already rippling across economies. Countries in Asia heavily dependent on Gulf energy are facing fuel shortages, triggering emergency responses and conservation measures. Europe is bracing for similar disruptions as early as next month. Executives warn the crisis extends beyond immediate supply cuts. Damage to energy infrastructure, including refineries and LNG facilities, could take months to repair, prolonging the disruption well beyond the conflict itself. While the crisis deepens globally, the United States is projecting confidence. Officials say the spike in fuel prices will be temporary, backed by record domestic oil and gas production. However, the impact is already visible. Higher fuel costs are feeding into inflation, raising prices of food and essential goods worldwide. In the US, rising gasoline prices are squeezing consumers and weighing on public sentiment. In contrast, countries across Asia and Europe are taking emergency measures. This includes tapping strategic reserves and subsidizing fuel to enforcing energy-saving steps. Governments warn that the surge in energy costs is slowing economic growth and increasing the cost of living, especially for vulnerable populations. The energy shock is also becoming a political challenge. In the United States, rising fuel prices have pushed down President Donald Trump's approval ratings, with affordability emerging as a key voter concern ahead of midterm elections. Despite calls to boost output, industry leaders caution that supply cannot be ramped up quickly. US shale producers indicate that sustained high prices would be needed for months before increasing drilling, as most capital plans are already locked in. Meanwhile, global energy firms warn that even if the conflict ends soon, recovery will take time, with infrastructure damage estimated at $25 billion and production restarts expected to take months. The tightness in global energy markets could persist. Business Bureau WION, World is One.